Hello, hello, hello. How's it going, everybody? Good morning, good evening, good night, depending where you are around the world. Welcome to the Capital Hungry Market Analysis and Trading Stream through the North American trading session. How is everybody doing? Hopefully the audio and visuals are all good. So basically, through the next couple of hours, as we're watching the markets through the North American trading sessions, we're going to be breaking down fundamentals, looking at active news headlines and the current Russia tensions, any economic events, breaking down the technicals, and mapping out some scalp and intraday trade ideas to execute with the potential volume at hand. Okay? So, for those of you who are new to the stream, just take a second, read the description, and relax. There's no point in being very impulsive or having your emotions running high or having all this pent up energy that you do not know how to control or direct to be productive and efficient as you're trading the markets. So don't worry, we're going to go through the process and we're going to break down analysis on gold, GJ, and the other pairs that we look at every single day and every single week. And for people who have questions about specific concepts like the 1 minute price action, when we start to dive down and break that down for scalping, or the key levels or fundamentals in certain detail, remember this Capital Hungry YouTube page has tons and tons of educational webinars at your disposal. I've even divided it into playlists, so you have over 100 webinars at your disposal. And if you want more than that, the Capital Hungry private channel is still open for signups. But nonetheless, let's jump into it because you know I love to dissect, break down, predict, and trade these financial markets. So to jump into it, the key fundamental points are the exact same from anybody who watched the Trade Ideas webinar that was uploaded to YouTube yesterday. So obviously what the market focus has been on is these Russia and Ukraine tensions, okay? But what we have to understand is that the market, smart money, market makers, the whales, whatever you like to call them, the market always moves ahead of the mainstream masses and is always moving on anticipation, right? This is where the whole concept of pricing in comes from. So with all the information we have received so far regarding the Russia and Ukraine tensions, for example, Russia showing further intent of wanting to invade Ukraine, them acknowledging two various regions in Ukraine as independent and wanting to liberate them and bring them back to Mother Russia, the various NATO countries like the parts of Europe, UK, America, of course, Canada, of course, starting to put economic sanctions on Russia. All of that information so far, all of that intent to invade, the military buildup at the border, the economic sanctions, that has been priced in, okay? So what we have to understand is the markets have already digested and priced in that information. It's one of the reasons from this point on here, when we're looking at gold, when the Russia tensions were first coming into play around 2 weeks ago now, gold has been so bullish on that market fear. But over the course of the last couple of weeks now, a lot of that fear, uncertainty, and doubt has been priced into the markets. So I was just showing you guys that here. Right? This whole bullish rally on gold, the buy orders flooding the market, of course it's still induced with higher global economic inflation, but it's primarily been because of the fear due to the Russia tensions. So what we have seen so far in terms of in terms of the buildup on the Ukrainian border, Putin's speech and his intent to invade, the economic sanctions from the other countries and allies of Ukraine, is that all that information has been priced in. we can see that is very evident, where that downside in fear has been enough to drive down the US stock market index to this very specific demand zone, but so far failed to break lower. So what I am trying to communicate to everybody is for us to see further market fear and take advantage of that market fear, we are going to need to see an escalation of the current tensions. That would either be more aggressive and deeper economic sanctions from various countries, like including the US today through the North American session, or actually escalating into physical conflict. Does that make sense for everybody? And is everybody following along? Sorry about that quick little flashbang. You of course have your news headlines to the left, and we're going to be breaking down these news headlines in the technicals shortly. But just so everybody understands, the dollar and Japanese yen were bullish the last couple of weeks, and the equity markets were of course more bearish because of all those tensions I just explained. But all of that so far has been priced in. So for example, the stock market being this bearish since last week was because of the Russia tensions. But all of that has been priced in to bring us to this very, very key make or break demand zone, right? The gold, we had all those tensions have us explode bullish from 1830s, from when the tensions came into play, to 1910s. But as you can see from the 1910s now, we're starting to see buyers take profit and entering this pullback structure from the highs. Starting to see some exhaustion by the buyers. Buyers taking profit out of the market, creating that technical pullback or consolidation phase. When you're looking at your sentiment indicators such as the volatility index, Japanese yen, and dollar, US dollar was more bullish here since the tensions. Same thing with Japanese yen, and same thing with the volatility index here. But we can clearly see on the intraday time frames, as the tensions so far have been priced in, we are starting to soften a bit on the US dollar, Japanese yen, and the volatility index on the intraday time frames. So what I want everybody to understand is, if you're looking to play continued US dollar strength, meaning you want to play GBP USD sells, or Euro USD sells, or USD CAD buys, or if you're looking to play or if you're looking to play Japanese yen individual strength, for dollar to break above this 96.3 price point, and for Japanese yen to break above 87, and for the volatility index to break above 32, which would result in the stock markets dropping a lot lower than that make or break higher time frame demand zone, what we are going to need to see is further escalation of these Russia tensions. Does that make sense to everybody? Everybody following along? So don't be surprised, and you have to understand that these geopolitical tensions move in waves. And now I want you to understand something from a psychological concept of when you're looking at the market through the lens of the market makers in smart money. Remember, smart money, the market makers, the whales, over the course of the last 2 years during the economic crisis, they have been primarily extending their wealth and making more money investing in the stock market, right? This crash just set up a sale for the rich as inflation was up, the interest rates were low, the feds were pumping the market. They were riding this greed train and extending their generational wealth. So they're in support of a very bullish stock market. They don't want to see another crash. A correction is possible, but you can see anytime we've come down to this very specific demand zone, whether it was Delta variant fears, whether it was Omicron variant fears, whether it was interest rate increase fears, and even with the Russia tensions, this has still been a very key make or break price sensitivity area where we don't see we don't see sellers hold below this price point. So in my opinion, we need to see physical conflict escalations with Russia or deeper economic sanctions for us to see US 30 trading below 33,500 and starting to see a corrective bear market form on the equity markets the same time we have interest rate hikes coming in the future, right? But as scalpers, as day traders and intraday traders, what we have to look out for was, yes, the market fear was evident. The Russia tensions brought that fear, uncertainty, and doubt. Yes, it was enough to drive the stock market down to this price point, but we still didn't break this very key make or break price point. Right? So we can also see the same time yesterday. What was very interesting was yesterday when we drove down to this price point area, this higher time frame demand zone, very easy to see that institutionally market makers like this price sensitivity area. And it's also very easy for us to deduct that once we break below here, mass market fear is much more evident, right? But yesterday, as soon as we came down to this price point, as Biden was talking and giving his speech about the Russia tensions, he was talking about economic sanctions, but he was also saying that they don't want a physical war. And the same time we came to this demand zone is the same time Biden started to deflate the situation through his speech, which was very interesting how the market timing goes and lines up with very specific price points of interest on the charts. Okay? So what I am trying to communicate to everybody is that as we're watching the headlines, because we don't have any economic events today, we already had the economic events over the Euro and London session, which was just some very minor reports that didn't have too much of a market impact. And we don't have any economic reports through our North American session. So what we're primarily going to be focusing on is the reactive headlines, these headlines about what Russia and Ukraine are doing, what the other countries are saying about this. But what we have to understand is a lot of these headlines that are coming in right now, like for example, UK's Boris Johnson saying they're going to provide more military support to Ukraine. All of this information so far is known. It's already been digested by investors. It's already been priced in. We need to see deeper escalations. We need to see some more physical conflict. We need to see some more movement by the NATO countries positioning their military troops further on the Ukrainian borders and actually having conflict with the Russian troops and so forth, right? So until then, yes, I'm in a higher time frame bullish bias on gold, but I can't see safe gold buys unless we get new fear tensions and break above this corrective pullback structure. Because what do we understand about trending markets? Well, it doesn't matter if you're looking at a bullish market or bearish market. Based on the transactions of order flow and buyers and sellers entering and exiting the market, in this example of a bullish market, you have buyers continuously enter from lower demanded price points, extend price up to previous price sensitivity areas or intraday highs, take profit out of the market. As they're taking profit and looking to exit the market, sellers jump in hand to let them actually have the exit liquidity to get out of the market. This transaction of buyers taking profit, sellers jumping in hand is what creates technical pullbacks. And then after you come to a more favorable demand zone, you continue with the overall trend. Sometimes you just have consolidation zones and order blocks created, but overall, that movement of price, buyers entering an asset class from a lower demanded price point, extending up higher, exiting out, sellers jumping in hand, having pullbacks to previous demand zones to collect more buy orders, or consolidation zones in breakouts is how the market trends. It doesn't matter what you're looking at. It doesn't matter what currency, stock market. You can apply that ideology to anything. When you're looking at gold here, that is all you simply see, right? All you see, let me make that a little bit brighter. All you see is buyers print highs. You have consolidation or pullback phases at the highs as they take profit and liquidity out of the market, right? And the pullbacks are usually correlated, of course, to the size of the impulsive move versus the breakouts. And at these high points, you can see you enter either a consolidation phase or some pullback structure. Like we're seeing here. But as soon as the pullback structure is complete, you reach a more favorable demand zone, you can see you just continue with the trend into either new highs or at least revisiting the previous highs, which is what I am expecting as long as we still maintain the bullish market structure. But right now, for the time being, as a lot of the war tensions have been priced in, what we can see is from these new highs printed by buyers, which is also reacting to a very strong supply zone. You can see here on the daily time frame, we are starting to enter some intraday pullback structure. Does that make sense for everybody? Which is absolutely completely normal with how gold behaves and how it trends. When we're really looking at the intraday structure here on gold, gold could easily very, very easily still come down into the 1880s here, and on the higher time frame be very, very bullish still. This would just be retesting the previous highs as a demand zone to collect more buy orders in the market before continuing back up again. Right? So in the short term, until we get some more market fear, until we get actual escalations of physical conflict and war, we are going to be looking to just analyze and play some of this pullback structure. But what I do like is this very strong demand zone at the 1890s here on the intraday time frames. You can see from here, every pullback we've had from a high being printed has come from a new intraday high. And also, if we fail to break below here, leads into a higher high. So this pullback that we're watching from the 1912 highs, it could easily double bottom here at 1890s and start continuing bullish. Or I'd be looking for breaks above 1897 and breaks above 1902 buys. If we fail to break 1890, this is what I'd be looking for. But what we have to understand right now for the time being is we are just in this pullback structure from the highs. If we break above 97, we can start to look for intraday trades and scalps. And we can also, if we react at 1890. Okay? Now, we're looking at the active headlines as we speak. We're having tons of Russia and Ukraine headlines coming in. We're seeing Russia has already started evacuating its diplomatic staff from Ukraine. That's very interesting that all of their diplomatic staff, all of their staff that are designated there for political talks are being evacuated. It does look like physical conflict is going to be coming very soon in the near future. But until it does, and when it does, this is what I'm going to be patiently waiting for myself. Even if we come to 1883, yes, you could sell below 1888 down to here, but I would still be higher time frame, just understanding that's a pullback for the better risk versus reward buys. Right? Even when we come now and look at the lower time frame, you can see ever since the highs were peaked and we failed to break the 1907s, for example, here, you can see a lot more profit taking by the buyers. And then primarily since then, sellers have been in control on the lower time frames as we've had that pullback structure, right? Any of these minor pullbacks are very short-lived as we continue to drive down to the previous lows being created. So what we can see happening right now on gold is an order block and lower time frame consolidation zone being created right at the retest of this lower time frame bearish market structure. If anybody is looking for scalps on gold, these are the trade ideas. Of course, the safe buys are if we just break above, or if we just break above 1897. If we have more market fear come in the scene, actual physical escalation with the Russia tensions, and a break above 1897, this shows us that we're breaking above that bearish structure, breaking above the 1897 key level, seeing a lot more buyer order flow in the market, and we can continue with the higher time frame trend. Okay? But at the moment, we do not have those confirms. What we do have on the lower time frame as a scalper and day trader is that pullback structure being respected. Overnight, sellers consecutively printing lower lows, a lot of the fear being priced in, and any pullback that we have from the lows eventually goes back to revisit the low and dig even deeper. So, for anybody who's looking for gold sell scalps, what I would do is mark out around 1893.5, 1894. If we have 1 minute candle closures below this 1 minute consolidation zone, then I can see the pullback structure still being respected and us making our way back down to 1890s, where we're going to still be looking for buys from the 1890s. But in terms of a scalp, for people who are waiting for gold trades, this current range, which is about 15 pips on the lower time frame, is not really favorable to touch. The safer buys is if the market fear continues to escalate through New York and we break above 97. And I would see sell scalps below 93.5, which is still a great 30 to 40 pip target range down to 1890. Does that make sense for everybody? Hopefully I explained that in good detail of understanding that yes, gold is bullish on the higher time frames, but for the time being, those fear tensions have been priced in and we're seeing buyers take profit from the highs and pull back structure from the high so far. So all we're trying to identify is, as long as this pullback structure is being respected, where will the buy order start to flood back into the market, right? So right now, best as a scalper to play this consolidation zone. This is the exact trade ideas I see. and the green boxes being buy zones, with the red boxes being sell zones. Right? Or if we don't break these lows and we don't get the double bottom retest at 1890s, if we just break above this order block and show more buy orders in the market and break above 1897, this is a great buy scalp area and intraday buy trade area as well. Does gold make sense for everybody here? So far, to summarize one more time, yes, the higher time frame, just you guys can screenshot this, rewind whenever, okay? Yes, the higher time frame on gold is bullish, but the tensions so far from the Russia drama has already been priced in. Buyers peaked these highs at 1912s, which is the supply zone on the weekly and daily time frame. All of the current headlines that we've seen, whether it's Russia evacuating diplomatic staff from Ukraine, or the UK looking to help Ukraine and go against Russia, or other countries putting economic sanctions on Russia, that has already been priced in. What we're seeing is buyers take profit from the highs and pullback structure being created from the highs. As we know that, what we are trying to identify is potential demand zones and buy interest points where we can potentially see more buy orders flood the market. This is where these ideas come in. The first one being this buyer demand zone at 1888, 1890. Right? If we were to come down here, fail to break again, very strong buyer demand zone. But if we break below there, we're still expecting a deeper pullback, which can come to previous highs before continuing up. I would only see the sell plays down to these lows if we can break below that 1 minute order block, with then looking for buys back in this demand zone and area, with me just showing you that price action on the 1 minute time frame. Or the safer buys if we come back above this corrective structure and see us holding above the 1900s and 1902s to start trending back up to these highs. It's very similar when you had this high printed or when you had this high printed here. The size of the pullback, that's not dependent on us. The pullback can last an hour, it can last a day, it can last a week. We assess the pullback based on the lower time frame structure and price points of interest, right? You can see here, you come to this same demand zone. But here you have buyers print a high, you have a pullback, a double bottom. As you break above that corrective structure, rally back to the highs and continue higher. Buyers print a high here, a pullback to that same demand zone, fail to break out of the structure, rally back to these highs and higher. Right? Same thing you even start to see here. Here, same idea. Buyers print highs. You have buyers take profit, enter a pullback phase to a more favorable demand zone. You break out of that corrective bearish structure on the lower time frame, and you trend bullish right back to those highs again and even higher. Right now on gold, the phase we are in is a pullback phase. Whether it's going to be hours long or days long, right now we are in a pullback phase. We can't confirm yet that the buy orders are back in the market and flooding the market just yet. Fair enough? Does that make that should be full sense to everybody now. So we're just being patient. Me personally, if I was looking for further intraday trades, even swing trades, I know that once gold, damn, it's a big yellow line. I know that once gold really comes above like the 1900s here, very, very clean buyer volatility to see us start trending bullish back up to these same highs again, playing the same bullish market structure. Okay? So right now, don't fight gold. You don't have to scalp every day. You don't have to day trade every single day. What we can see, especially on the lower time frame, is we are just in this bit of a consolidation zone. But those are the trade ideas I see in on gold. Now, watch the headlines we got coming in. Russia embassy in Ukraine has taken down the Russian flag. Like, a lot of this so far has been priced in. Okay, everybody. So now, as we're patiently waiting for those setups there on gold, let's break down GBP JPY the same way. The fundamentals, the technicals, what's impacting it, and so forth. Okay? Because we got time. We got time. We still have 30 minutes until New York Open. We're going to be running the stream into New York Open anyways, waiting for those scalp ideas. And this is the whole point of learning and teaching about the markets, bringing together the fundamentals, technicals, higher time frames into the lower time frames, and so forth. Okay, so when we're looking at GBP JPY, we all understand why it has been so bullish over the course of the last 2 years since the crash of the pandemic. Whether you're looking at intraday time frames, 1 minute time frame, you can see buyers consistently printing higher highs and trending bullish, with only having the same way I was just showing you guys that hourly and 4-hour structure on gold is the same way you can read this daily structure, except the pullbacks are just more on the higher time frame here, right? That can potentially last days or weeks. Okay, so overall on the higher time frame, GJ has been very bullish, especially with the UK stock market so bullish over the course of the last 2 years. The support of the central banks pumping the markets, of course, and of course Japanese yen being weak on the market optimism. But we can start to see a lot of exhaustion and buyers failing to break this very key 157.5 supply zone. Okay, so every time we've come to this area, we start to create either on the intraday time frames here, every time we've peaked this area, the buyers start to take profit, and you either have a consolidation phase created or a corrective bearish market structure phase with very aggressive waves and pullbacks, right? A lot of indecision on the intraday time frames. Same type of thing you can see here now, right? As long as these war tensions are still evident, what we have to understand based on how this pair moves and trends is in this price sensitivity area, as orders are being collected, the intraday price action can clearly get very messy, right? You can have very aggressive whipsaws and ranging of price. Here you can have sellers in play for hundreds of pips, a huge pullback as you're overall edging your price down. Same thing here, you see huge pullbacks as you're overall edging your price down. Same thing here. You're seeing monstrous pullbacks, but overall GJ price is edging down and sell orders are being collected. Okay? So yes, on the intraday time frames, it's getting a lot messier, but really you can't see safer buys on the higher time frames unless we were to clear above the 157.5 highs. Let me show you a great example. Let's see if I can find a good example. This is a pretty good example here, the closest example we're going to get. Yes, we broke a bit higher here, but this is very short-lived. You can see, even though we were respecting the overall bullish market structure and buyers in control, there was not enough buyer order flow for months to break above this price sensitivity area, right? You would have great bullish intraday rallies to these highs. It would look like there's a lot of buyer's pressure, but until you actually got the candle closures above and technical breaks above, you would always reject and get some aggressive pullbacks from that price sensitivity area, right? This is very similar to what we're seeing start to build up in this area on GJ at around 157.5, 158. Yes, we're still maintaining the overall bullish market structure. Yes, we're still maintaining this 149 buyer demand zone, but it's not going to be out of the ordinary that we get some deeper pullbacks if we fail to break above this area, especially if we have an escalation with the tensions bringing some Japanese yen strength and weakness in the UK stock markets that can give us some deeper pullbacks here on GJ before seeing buyers potentially come back in on the higher time frame, right? What we can also see from these highs is this bearish corrective structure still being respected, but us being in this very strong consolidation zone. So that's what I'm potentially still looking at here on GJ, is we have to see that, yes, we're getting some aggressive buyer whips, upside plays, but it's still not breaking above previous highs. It's still not breaking this bearish structure from the highs, and we're still not seeing that full seller's pressure. Right now on the intraday time frames, you can see GJ in a bit of a messier range here. The trade ideas I'd be looking for go as follows. If through the New York session, yen can hold a bit more strength and we can see some more tensions, if we have New York grab some volume but fail to break above these intraday highs printed and come below 0.500, I'd be looking for some sell scalps, or breaks below 156.2 sell scalps. Does that make sense for everybody on GJ? Right? You can see it's very, very similar to when GJ peaked these highs here before. This is January, start of the year. Yes, on the intraday time frames, you have these huge aggressive pullback plays where buyers are in control for a short period of time, right? No, GJ doesn't correlate with gold, you fucking idiot. But anyway, just pay attention to what I'm saying. Fucking retards, man. But you can see any of those pullbacks are very short-lived, and overall, if we don't break above the significant previous highs, you have sellers jump right back into play and dig us down lower and lower. As messy as it is, overall, sellers are driving price down lower. Okay? So that's something you have to keep an eye out for when you're looking at GJ now. A lot of these pullback plays have been starting to get faded out, especially if we can't clear above 156.8 and so forth. Huh? What are you guys talking about? No, GJ does not correlate with gold. GBP Jpy individually, the currencies, do not have any correlation with the precious metal gold, the physical asset class gold. The correlation between them is the market sentiment correlation. When you have a lot of market fear, Japanese yen and gold will pick up strength because they're safe havens. But there's not an actual direct correlation between the yen and gold. Okay? You have to understand the core concepts. A lot of you, I know what you're thinking. Oh my god, every time I see big headline and gold push up, GJ go down. This fucking related. I found it. I found a secret. No, you fucking retard. It's because the market fear has investors pool money into safe havens to hedge against the risk of the fear catalyst. So you'll see equities drop a bit. You'll see gold go up. Japanese yen go up. Swiss franc go up. The US dollar go up. That's why if you have a lot of market fear and gold is pushing up, there's a higher probability GJ will be pushing down. It's based on market sentiment. All right? There's no direct correlation between the currency GBP or JPY and the global physical commodity and asset class precious metal gold. All right? Shit, man. It's fucking ridiculous. yeah, I'm just messing around. But what I said right there is 100% fact. Okay? That's the truth information. That's real information. I'm not joking about that. The roast and stuff, that's just joking around. Don't worry about that. All right? Retail traders think they can just come stare at the charts, watch streamers every day, and just stare at the charts like a freaking, literally like a retard. And they think they're just gonna start finding secrets of the market. It's like, no, these are real world financial markets, real world economies, jobs, wages, inflation, interest rates, order flow, investments. You know what I mean? Real world geopolitical issues and tensions. Gold, whether technical traders want to admit it or not, right? Whether they want to admit it or not, gold hasn't been so bullish because of lines on a chart. Gold has been bullish because of the Russia geopolitical tensions. You know what I mean? You know what I mean? All right, everybody. If gold starts to break above this order block here and hold above, the buy scalps above 97 and 96 area will start to look a lot more favorable. But the only thing we have to keep an eye out for is that obviously New York Open is in like 10 more minutes. So there is a high probability with the New York Open giving us a pullback, grabbing some liquidity. But right now, it does look like we're starting to form more of a bullish lower time frame order block. I'm not looking for the buys here. I would just confirm that if we get the break above, then the breakout above 97. If you start to take 97 area buys, either break or retest, you're going to have to watch price sensitivity areas going up and scaling accordingly. Around 15 pips up and around 20 to 30 pips up here. I am hoping that we get some more drama with the Russia tensions. And if we do, you're going to see it here. We just got a headline right now as we're talking. Russia's deputy editor-in-chief says the UK's culture minister is now clearly directly interfering in institutions touted as supposedly wholly free from political pressure. We're getting some more tensions. Follow the yellow brick road. Just follow the yellow magic lines and yellow brick road. I had the instinct that this was going to start to break out of the order block after another rejection from the low again here. 10 pips? Yeah, right here. Where's Raja? Raja's stream would be done for the day. Tell Raja I said that. Raja's stream right here would be done for the day. 7 pips. Like, all right, we're done. We're finished. No, I'm just kidding. We're waiting till the New York Open. We didn't break above 97 yet. We still have 10 minutes till New York Open. All right. Am I a munchkin? I don't know what a munchkin is. If that means like a little person, like a dwarf, no, I'm not. All right, everybody. Now, everybody understands the gold analysis and the GJ analysis so far, correct? Now let's check out our dollar pairs. Dollar pairs, I'm sorry for anybody. Hands up in the chat. Put a 1 in the chat if you trade dollar pairs. Euro USD, GU, USD CAD. I'm going to say a prayer for y'all. Because dollar pairs been disgusting. Who here trades dollar pairs? GU, Euro USD, USD CAD. How frustrated have you been over the last week or two? Unless you're playing just the consolidation bounces between highs and lows, how frustrated have you been playing dollar pairs? Right? US dollar pairs been absolutely disgusting in their ranges. Euro USD, GBP USD. Their intraday ranges have been disgusting. Unless you've been playing the highs and lows, disgusting. Right? But I am still higher time frame bullish on US dollar. The war tensions are bullish for the US dollar. Okay? As we start to go into interest rate hike territory, which is coming in the March meeting with FOMC March, as we're getting more and more war tensions, I am bullish on the US dollar. It's just that we've been consolidating, right? Whether you look at GBP USD or Euro USD on the higher time frame, the overall structure is still bearish, where this has just been a deeper pullback phase for the new year. Okay? So overall, all we've had as dollar has been trending bullish on the higher time frames is sellers consistently print lower lows. We have these pullback phases on the intraday time frames as the sell orders get collected from significant supply zones. You can see we drive down to the previous lows and lower lows every single time. So as we get the US dollar strength back into the table, a very easy sell on GU is below 1.35. If you put a sell stop on GU below 1.35 and forget about it, and the war tensions escalate, we're going to be starting to make our way back down, trending down to these higher time frame lows, still playing this overall bearish market structure. Right? GBP USD movement here has just been the inverse of dollar movement, because the dollar is obviously the world reserve currency and global business currency. So the dollar here, you can see the same time GU has been more bearish since the start of 2021. Dollar has been just having buyers consistently print higher highs and pullback phases to continue right back up. Right? Siam Kumar Katori. War is not happening. Sell gold, buy platinum. Why buy platinum then? Fuck, man. You guys roast this man for me. I don't feel like roasting him. His name is enough of a roast. The guy's struggling enough. Coming here typing. Coming here typing from his hut. My man said war's not gonna happen, like wars don't happen in life. The US loves war. Okay. So on GBP USD though, on the intraday time frames, I would love if this daily candle can turn bearish and we can get some more war tensions. I'm going to be looking for New York to give us a liquidity grab to 3.6 sells or breaks below 1.354 sells. Euro USD, higher time frames, same idea. We're just in a consolidation zone, but more of the inverse of the dollar movement, higher time frame bearish. We have a range to play with these sells that have been consistently printed. Once we break below 1.13 flat, very nice moves to start making our way down to these lows with the escalation of war tensions. In terms of some intraday style trades here, we've already had our double top at the sell zone given last night at 1.36. We really only see further sells on Euro USD below 1.31 at this point. Okay. Now, as we wait for New York Open, if anybody has any questions for the next 10 to 15 minutes, I'm just going to be looking at the chat and reading comments and questions. So whether it's a funny comment, funny question, stupid one, I'll reply to it. All right, so let's go do that for now. Someone said useless poll. It's just a poll, bro. Relax. You know what's useless? Coming to a chat, you coming to give me a view, coming into my chat, using your retard fingers to type useless poll. What did you accomplish with that? Because at least I'm getting a view from you. I'm getting you interacting in the chat. But what are you doing in your life accomplishing? Right, Hansel? Where's Gretel at? Go back and find Gretel. No, but seriously, if anybody has questions about anything right now, now's the time. My terminal, I'm working on that 50K account build. So this is the 50K account I'm working on. I've done a roughly almost 50% on it. So it's at 70,500 capital right now. 20,000 profit so far. This has all been within a week. Actually, yeah. From the 14th to the 23rd. So minus the weekend. 1, 2, 3, 4, 5, 6, 7. Pretty much 7 active trading days. You know what I mean? But right now, I'm in no positions. If you guys want to see what I am looking for, it's the exact same trade ideas. I'm looking for a buy limit at that demand zone. I'm also looking for a buy stop if we break above 1900s, 1902s. Also a buy stop if we break above the previous highs. So these aren't active, these are limit orders, and these are just some deeper limit orders in case gold does deeper pullbacks with the risk already set. This is that new account build. I still have my main account here as well. I withdrew from this account, my main account, to make that other account. I'm trying to do what Raja did, a slow and steady build. But right now, I did $20,000 in 7 days on a 50K account using smaller lots than I normally do, like 2 lot, 5 lot, you know what I mean? Right? No, this is an hourly chart. These are like intraday trades with like 20 pip stop losses. I personally, whether I'm scalping or day trading, like to stick to a 1 to 3 risk versus reward. So with these trades, the TP isn't set but they're 20 pip stop losses. I'm looking for at least 60 pips, which is very, very reasonable if gold comes to this demand. Like, for example, this buy limit just missed. That buy limit just missed. If that buy limit dropped 10 more pips, this already would have been a 70 pip intraday trade. That would have been more than a 1-to-3 risk versus reward. I would have had a 20 pip stop loss. It would have activated 60 pips profit. Or if we break above 1902s, I'm expecting us to at least start to revisit these highs, 1908s, 1910s. Again, I'm willing to risk a 20 pip stop loss for a potential triple reward of 60 to 80 pips and so forth. You know what I mean? But yeah. Yeah, I did take one trade. This gold buy was from this low here. My buy limit didn't activate. But I was at the charts there. Which was right here. You can see 50 pips. So I had a 15 pip stop loss, and then I took 50 pips out of the market. A positive risk versus reward. So don't get me wrong, when you're looking at this account, I know it seems like $20,000 is a lot in 7 days, and it is a lot. It's almost like 50%, right? But it's not like I don't take losses. I probably have about a 60-50% win rate, but my losses, for the most part, I would say 80% of my losses are controlled at a predetermined stop loss, sticking to the risk and reward. Whereas, of course, sometimes I take some emotional losses here and there, but you get what I mean. Like, everybody's going to take emotional losses here and there. You know what I mean? Yeah, okay, so New York session just opened up here. Let's see what we got going on. The risk isn't really dependent of percent risk. It's more based on a monetary risk. So it's based on my stop loss. For example, I was using around 2 to 5 lots on average. So I would risk around 20 pips on these intraday trades, which would be like, if it was a 5 lot, I'm willing to lose $1,000 to potentially make $3,000 or $4,000 on that specific setup. All right. Okay. So now, gold just opened up here. I'm liking the price action here with the bullish candle above 97, but this so far is just the first couple of minutes. Let's let some more price action candles confirms develop. What I would like to see is if we can retest this order block and make a more significant lower wick, then come above 97s, I could see some nice potential buy scalps. So this is just New York Open, only 2 minutes into it. Let's let it set up. All right. No, majority of my controlled losses go to a full stop loss. But obviously, there's many times where like I'll get emotional and move my stop loss a little bit and so forth. And sometimes, yes, there's situations depending on the price action where I may trade manage early, either securing a win earlier or preventing a bigger loss. But at the end of the day, all I'm trying to show you with that transparency is I don't win all the time. And I've shown you guys this on my main accounts. I've shown you guys this for years now. I've been showing my process since like 2019, right? I don't win all the time. I don't promote trying to have a 90% win rate because it's not sustainable. Having a 50% win rate is really probably what I got. But what makes me profitable is focusing on the math and numbers. Yes, my analysis is absolutely fucking fantastic. Yes, my execution is top notch. But what's really making me money is the positive risk versus reward. The majority of my winning trades are double, triple, quadruple the size of my losses. So even if I take a stretch of 10 trades and win 50%, meaning I took 5 losses, right? I'll still be in profit. I'll still be profitable, focusing on that risk management and risk versus reward system. Does that make sense to everybody? Okay, we're getting some more heat intentions. If gold starts to hold 97, we can potentially see some nice scalps coming in. GJ is not ready for any trade ideas yet. Moscow will give a strong response to new US sanctions from the Russian Foreign Ministry. Yeah, let me explain it to you guys in very, very simple terms. Let's look at it. Do you guys mind if I break down the psychology while we're waiting for the trade ideas? I'll give you guys a diagram right here. Okay? Do you guys mind? Yes or no? Or do you want me to just look at the price action on the charts? When new traders are focusing on account growth, all they're focusing on is, and what they have is false expectations from social media. First of all, majority of retail traders nowadays are introduced to the markets from social media, right? So they're shown all these false expectations, people flipping accounts, people showing demo profits, Lamborghinis, and so forth, and people showing everything in a very short period of time. Retards like Daniel Savage or Q Banks, who know nothing about the markets, showing like, oh, look at all this huge profit, it's so easy, right? So what this does is, for majority of retail traders, they think their trading journey is going to be starting from here and boop, a straight arrow of success. They have these extremely false expectations that get created, so they have a very incorrect view of the markets. This false expectation leads to over trading, over leveraging, risking 50% of your account on a trade, trying to flip your account every single day. Every single day, they are trying to get hero wins because that's what they're seeing on social media. That's what their mentor told them. That's what they expect, right? That's what their greed is telling them. That's what their terrible mindset is telling them. And what happens is, yes, people will get those short-lived wins. They'll double their account. They'll be on a win streak. But because they're not focusing on the risk management, because they're not focusing on the actual long-term growth, and they're only focusing on the short-term satisfaction, the short-term gains, only focusing on the instant dopamine hit, as soon as they start to take a loss, they cannot manage the loss. That loss, instead of closing it as a very normal loss, what they start to do is they remove their stop loss. They double down and add more positions. They leverage in more. And they completely wipe out their profits and end up even crashing their account and needing to deposit again. So then, over years, they start to create what is called gambler's fallacy, right? What happens with the gambler's fallacy is a person will be trading the markets for years, but they don't realize that overall they're losing money. Every single little bit of a spurt, or every single time they double their account or make some profit, they're feeling great. But then the same thing repeats and their account and their trading journey is in bearish market structure. These spurts of optimism and their account getting some wins is what keeps them addicted to the markets and addicted to trading, right? But at the end of the day, their growth is never sustainable. It's never consistent. They're overall losing day in and day out. They're constantly depositing, crashing accounts, and then they start blaming the marketer. Oh man, this guy said it was so easy. Why isn't this Fibonacci working? Why isn't this working? Right? At the end of the day, what I'm showing you by focusing on risk management, you can sacrifice a 50% win rate. So now let's look at a diagram here. Let's just say this is a stretch of trades. 10 trades, right? 10 trades. And this is going to be trades over days, right? This is 10 days, 10 potential trades, right? Your focus is on taking quality setups like it always should be, but your focus is on sticking to a positive risk versus reward, whether that is scalping, whether that is intraday trading. I personally like to suggest 1 to 3 risk versus reward. This will allow you to be able to sacrifice a 50% win rate on trades, right? 1 to 3 RR. Let's just say, for simple sakes, we're talking scalping ideas. Okay? As a scalper, let's just say, or even a day trader, that means you're willing to risk 10 pip risk on your stop loss, but you're looking to gain 30 pip gain. Okay? Now, if you have a 50% win rate, which people would say, oh, 50%? 50% is garbage. What the fuck? You lost 5 trades? What the fuck? I saw Daniel Savage show he only won every trade. I saw this marketer say he hasn't taken a loss since 2008. I saw this guy flip his account. 50%? What the fuck? Well, when you have that mindset, guess why you're not consistent? I've been consistently making profits since 2019 now. From penny lots to larger lots, even showing you guys the trades, wins, losses for years now, right? I'm telling you, your focus should be on the probabilities and risk management. But anyways, let's get back into it, okay? So 50% win rate. Let's just say, doesn't matter what your account balance is. We're going to say every single trade you risk 1 lot, right? We're going to say the red boxes were losing trades, losing days, and the green boxes were winning trades. We can even say it's realistic. You started off with 2 losses. Then you only took 1 win. Then you had another loss. Then you took another win. Another win after that. You went on a little bit of a streak. But then you took 2 consecutive losses after that. But then you had another win. We can even say, you know what? To make it even more realistic, it wasn't even 50%. You took another loss. But what is important is every single one of these wins was 30 pips, and every single one of these losses was 10 pips. Correct? Right? $100 loss, $100 loss. Obviously, the bit of commission you're going to pay and so forth. But the wins, and this is only a 40% win rate that day or that week, that stretch, right? It's not even 50%. Right? The wins here, with a 40% win rate, you can see $3, $6, $9, $1,200. The losses, $1, $2, $3, $4, $5, $600. Even with a 40% win rate, if your stupid ass learn to control your emotions and accept a loss, guess what? You're up $600. Correct? Even with a 40% win rate, net profit, we're going to say $500 after commission and so forth. That's over 10 days or 10 or it could be 10 scalps. This can be over 2 days. You could have taken 10 scalps over 2-3 days. Remember, okay? This is with a this is right here is with a 40% win rate. If it was actually a 50% win rate, let's just say we did the actual 50% win rate. Right? This was also a win to close off that previous. $300, right? That's even more. You see the takeaway now. 1,500. Even less of a loss. It's only 500. And you walk away after 10 total trades. You walk away with $1,000. It's a game of probabilities, risk management. It's not even a game of being right or wrong. It's a game of making decisions based on analysis, pre-planning analysis, right? And then putting a risk into the market for a potential positive reward. Does that make sense to everybody? What I'm showing you here, this ideology here, is the exact same thing on how I made $20,000 on the 50K account in 7 days. It's not like I won every trade. I took a lot of losses. Probably 50% of the positions I took were losses, but the losses were controlled. They went to a predetermined stop loss, a risk I was ready to lose and willing to lose. The mistake with traders is that when it comes time to start to have a potential inevitable loss, they can't handle this potential $100 loss. They move their stop loss. They double down. That $100 loss turns into, based on emotions, based on not having any risk management, the $100 loss turns into a $300 loss. Now your risk versus reward is completely off. You completely set yourself backwards. You're putting yourself further behind. And you're not even looking for a positive risk versus reward. No, you do need skill to make money, because you still have to have at least a 50% chance of winning. Just because there's a 50% probability of winning, like a coin can go heads or tails, doesn't mean you're going to hit heads or tails every single time. You could hit heads 30 times in a row. Does that make sense? The probability of hitting heads and tails is 50%. But based on chance, based on the conditions, you could hit heads 10 times in a row. So this is where the knowledge of your markets comes in. The way you can increase your win rate, the way you can increase being on the right side of the market, right, is by having a stronger knowledge of the markets, fundamental, technical understanding. The more accurate your analysis becomes, the more confident you become in your analysis, the more you execute on your pre-planned analysis, the better you will become overall. But yeah, quick math lesson, quick risk management lesson. Does that make sense for everybody? Right? So don't try to go for hero trades, trying to flip your account every day, trying to make 50% in a trade or day, over leveraging, over trading. Because at the end of the day, for the 90% of retail traders, it leads to crashing and burning. The brokers know this. The market is designed to take advantage of human inefficiencies and weaknesses and completely exploit emotional individuals and pay out the very small percent who understand the risk management, probabilities, and emotional control, right? There's a reason all these people on social media might pretend that they're winning, might show all this fancy stuff, but it's all fugazi, it's all fake. The statistic is that 90% of retail traders lose. whether they like it or not. You know what I mean? Okay? Ukraine president says decision to suspend Nord Stream 2, which is natural gas, or if I'm not mistaken, oil pipeline that runs through Europe, I think through Germany, that's Russian owned. So we are seeing tensions escalate. When we're looking at GJ here, we can see we grab some liquidity to the upside. We're still respecting some lower time frame bearish structure. If we have fear hold out stronger and we don't break above 0.500, I can see sell scalps for potentially 15-20 pips to revisit these lows again. Gold, gold I already talked about. We're talking about 97 buy scalps. Okay, there you go. And there you go. 50 fucking pips. I'm the king. Hopefully my buy limit didn't get activated yet. Or buy stop. No, it didn't. Good, it didn't. Straight to the next key level. Called out live ahead of time. Exactly what to look for and why. We saw the news headlines and tensions coming into play. We had a quick little minor retest here. Support created. Break above and hold of 97. This is what happens when you guys want to watch Rajan come in late to here. You miss the trade ideas. Don't tell me I didn't give you this ahead of time. I drew out the magic yellow lines. Don't tell me I'm not the king of this shit. Fucking, I think my shit froze. Come on. Where the fuck is my screen? Don't tell me I'm not the king of this shit. Of this entire game here. Of this entire game here. Alright? I want W's in the chat. I want that support. I want that love. Come on. Who else really does it like that? Every time I stream, it's still going. Alright? Yeah, I just closed 15 pips on my buy stop from 1902. 20 pips now, just secured quick. I told you the fear headlines were coming in. Capital Hungry News Terminal, say thank you to the news terminal. Say thank you to the Capital Hungry News Terminal. Yeah, that's it. That's it. We're done. What do you mean, what else? What do you mean, what else? That's it. The trade's done. I closed 20 pips as well. I'm out. Yeah, where's Buy Platinum Man? Where's Buy Platinum Man at? Yeah, we're probably just gonna get a pullback and stuff now. We'll just see what happens now. But we're just getting, we're getting further escalations with the tensions, right? So. Raja, did Raja catch it? Great job, great catch there. Yeah, I was telling him, get ready. Great job, great catch. Good job, good catch. Excellent work, excellent work. Yeah, that's it for this. That's it for that. Like, we don't need anything else there. No need to be greedy, right? Banter chat. Great job, everybody. Great job, great job. Gold buys all around. Excellent, excellent, excellent. Great work, great work. Secure positions. Leave your runners risk-free. Don't be greedy. Don't be a greedy piece of shit. Rob just said I robbed the banks today. Yeah, man, we caught the gold buys. We got the headlines live. 1897 though. Because I'm answering all the profit messages. All the people, bro. All the people I just made money. This guy, $9,000. This person made their money. This person made their money. What do you mean? Helping the people. Guy said stupid broker slipped my TP to his own broker. Yeah, you missed it. Yo, tell your viewers, Raja, to rewatch this stream. Huge, huge, beautiful trade call out. You didn't fight no bank robber. You only made $300? Only? In this short time, only made 300? You piece of shit. Yeah, the new 30-minute candles are just setting up here. We'll probably get a deeper liquidity grab and stuff. If we don't break above these highs right now in the 1 minute here at 1904, we're going to get a deeper liquidity grab for this new 30-minute candle coming up. And a lower wick made for this new 30-minute candle. No, I'm still doing that. This guy said we never call. This guy just came from Raja's stream, I'm guessing right now. But I'm pretty sure everybody just followed. Everybody roast Al Hanouni right now. What a retard. We just took these trades together today. Gold buy scalps and so forth. You wanna see something beautiful? I'll show you something. Look, you wanna see something, Al Hanouni? They don't really show the concepts in the fucking they don't really teach exactly what he's fucking doing. Do you see this right here? Rewind the stream right now to minus 34 minutes ago and tell me what you see here that we said is going to happen on gold. Do you see this on gold? This is 30 minutes ago. Everybody see this? We said we were going to break above this order block. Start to look for buys at 1897, scaling up accordingly. Right? 1 minute, hold above 97, retest, exact price lines drawn out. Please tell me exactly what happened here. And tell me again, who doesn't call things out ahead of time? Please let me know. Because I'm a fucking beast. Please let me know. Right? That's it. A picture says a picture says 1,000 words, all right? Picture says 1,000 words. That's it. That's all I got to say right there. I didn't just tell you why gold's bullish. I didn't just break down what gold is going to do. I literally drew out exactly candle by candle, line by line, what gold is going to do. Do you understand that? Candle by candle, line by line. I'm actually really proud of this. I know I do it all the time, but that's crazy. We even talked about this little bullish candle right here. What more could you want from me? All right, that's it. The trade's done. The information's been given. All you people who came late from Raja's stream, you guys missed out. You guys missed out on the great information. No demo. This is the 50K account new build I'm doing on Raja's broker, Dominion Market Best Broker. Sign up using my link in the description below. Sign up today and get a bonus. Actually, don't. There's no bonus, actually. But sign up today. Link in the description. This is that 50K account that I'm working on. This is my... Yeah. This is my main account. I didn't trade today. I got 3 accounts on Dominion, but this is the one I'm trying to build like Raja. I'm trying to follow Raja's footsteps. No, I had the scalp I took. I had buys earlier, and then the scalp we took, was the buy stop. Yeah, if you were to take a buy with your breakout here, Nino, if you're talking about just a bit below 97 here, yes, your stop loss would have to be below the order block on the 1 minute, because your scalp analysis and your buy trade is invalidated if gold breaks below here. You know, based on the 1 minute price action, that if gold was to break below here, there's a higher probability it will drive down to these previous lows. So you don't want to risk losing any more than that, where your trade will already be invalidated there, right? So if you were to take the buys, your entry would be over here. If you're talking about the order block break, your stop loss below, and then your continuations to the upside. But we were calling the buys mainly from 97 holding, plus or minus the 5-10 pips. We were just bouncing around there. Yeah, if anybody has any questions, feel free to ask me any questions. Yeah, it was these headlines we were watching that brought the fear, uncertainty, and doubt. So we had these specific headlines you can see to the left that luckily we got within the minute. As soon as those more fear-related headlines came in, you can see we had that explosion in price. Right? For anybody who is new here, make sure to check out the Capital Hungry YouTube page with hundreds and hundreds of webinars, educational webinars, no clickbait. You have these playlists for yourself as well. Your stop loss would have to be below the order block. If we were to snap back below this order block, if you're taking the 97 entries. All right. So you have all these playlists, educational trading webinars, live trading streams, live market update webinars, individual market analysis, 1-minute breakdowns, self-development videos, right? Hundreds and hundreds and hundreds of webinars here on psychology, fundamentals, technicals, and so forth. You have the Capital Hungry News Twitter, which has posted over 30,000 news headlines. Forex Factory, even newspapers online sourced from Capital Hungry News Twitter here. Just constantly posting headlines throughout the day and night. And the Capital Hungry free Telegram analysis channel, where I share charts, updates, analysis, trades that I've taken, news, information, mental reminders, and more. The broker of choice of mine, I'm using Dominion Markets. All of these resource links, the free resource links, Dominion Markets link, is in the description below. Okay? No, I do a Monday market update webinar, a Wednesday live scalping session, and then a Friday self-development video. I stream 5 days a week in the Capital Hungry private channel. All right. Yeah, this is connected to a news terminal, but this is for private channel members only within the Capital Hungry private channel, where private channel members get access to 60 plus educational webinars, like a course to go through the fundamentals and technicals, daily trade setup webinars, news terminal room, key level price alerts, market monitor, session reminder alerts, newsroom, other members' trades and market information, economic event reminders, the Capital Hungry community itself. You can see all of us here who caught the gold buys. Right? No, I don't have a one-time option. It's just the monthly option. I do the monthly on purpose because if somebody doesn't like the Capital Hungry service and they don't find value in it, then they don't feel like they got scammed. They spent the month in the channel, they got to indulge in all the content, be active in the trading sessions, analysis, information, and so forth, learn a shit ton, and if they don't like it, worst case, they can cancel. And also, the monthly membership helps me gauge the quality of Capital Hungry. Like, it might not seem like a lot, but having 400 people consistently choose to use the service month after month is really shows a lot about the quality of the service. You know what I mean? Every single month for years now, people have chosen to use the Capital Hungry service as it's been consistently growing. But anyways, no more trade ideas now. If you're looking at gold and you're going to be looking at gold through the next coming sessions, these are the trade ideas I'd see. If you can't earn $100, then you probably shouldn't be trading the financial markets. Trading the financial markets is a luxury and opportunity. So to say $100 around the world is not easy, then go work a fucking job, buddy. Go into McDonald's, put on your fucking McDonald's visor, and make some McDoubles until you got disposable income to actually trade the markets. Trading the markets is a privilege, an opportunity. It's not for the impoverished. It's not for people who are broke. If you're broke, you shouldn't be trading. You're probably going to lose more of your money, you idiot. Trading's an opportunity, a privilege. You're trading on your smartphone, on your computer right now, with access to the internet, connected and paying for internet, paying for data, paying for fucking all this different stuff, depositing into a broker account. Like shit. So if you can't handle that, then maybe you shouldn't just be trading overall. It's not like trading, you're putting money into the markets, risk into the markets. It makes sense though why 90% of retail traders lose, you know what I mean? Dollar has just been ranging. Japanese yen and dollar have just been ranging. Dollar pairs have just been extremely in messy ranges. For anybody who came in late right now, I'm not trying to be rude, but if you guys re-watch this webinar, you're going to learn a shit ton. Ask the people who were here since the start how many lessons I gave in this webinar. I gave fundamental lessons, technical breakdown, psychology, a risk management breakdown. I guarantee you, if you watch the first hour of this webinar, you're going to learn more from your last paid marketer. I promise you all that, okay? Hyenas, I promise you that. If you watch, you all came late because you're watching Raja. You all like to spam in Raja's chat. The gulag. I get it. The gulag. Oh, the gulag. Oh, we're all in the gulag together. I get it. It's fun. Raja's entertaining. Great stream. I get it. But because of that, you already missed out on everything. Okay? So this is going to be saved. You can re-watch it. I gave full breakdowns on how to do technical analysis, fundamentals, everything, all right? And analysis on dollar, Japanese yen, these other pairs and stuff as well. Yeah. No, I'm leaving soon. I'm done soon. We're done the stream. I started around 7 a.m. Hey, Remix! Guess what? Ted and Raja, they don't like you guys. Ted, Raja, and I, we're all friends. You guys are the fucking audience. You're not friends with Raja. Raja doesn't know you as badly as you want to grab Raja's balls and hang on to them. As much as you love his stream, the man doesn't know you exist. Raja, Ted, and I, we're all great friends for years now. We talk every day. You want to be jealous? We got a private group, just us. We got a private chat, just us. We talk about gold every day. The fundamentals, the markets. Yeah, oh, Gulag. You guys wish you were in that, eh? You're not invited. You're not invited. Y'all can't come in. The door is closed. It's invite only. Raja, I'm only telling you all this because a lot of people try to make drama between Raja, Ted, and I, and they don't realize like Raja, Ted, and I are really good friends. We talk literally every single day, multiple times a day. So people always try to make drama. One guy, like Ted, posted something, and somebody's like, "Oh man, I think Ted's posting about you. I think Raja posted this about you." I was like, "No, it's not about me. 1,000,000%, it's not about me." You know what I mean? So whether you love me or hate me, whether you're spamming good comments in the chat or bad comments, remember this at the end of the day. You're giving me a view. You're giving me your energy. You're giving me that effort. You know what I mean? No, I even showed my terminal multiple times. We all took the same trade today. So yeah, I don't know. I'm just reading the chat now for fun. Yeah, Kerwin, Raja, Mac, Ted. Who said I got no trading history? I showed it like multiple times. I've been showing my trades for since 2019. All right, everybody. Thank you for attending the stream. For anybody who's trying to learn more, the gulaggers, the gulag members, the gulaggers, the short attention span, the short attention span, hyper emotional, hypersensitive members. Please make sure you just watch this stream again. All right. That's it. We're done for today. I started around 7, so we're pretty much done today. We're gonna call it a day. And I'll see you guys all next time, all right? All right, everybody. Thank you. Take care. I appreciate you all watching. I appreciate the comments, the likes, the interactions in the chat. I appreciate the good comments, the bad. Thank you all for attending. I'll see you all next time.